Hey guys, this is Market Update. In this video, I just want to ask one simple question. What on earth are we doing buying Bitcoin at $92,000 per coin? This is ridiculous, right? $15,000 last year, now $92,000. So I want to go through three different points. The first one is the longer term trend. Second one is how Bitcoin usually reacts when it does reach price discovery and how long it stays there. And then the third one is why we will enter a new bear market at some point, but not right now. We're in the good bit, right? And this is the reason. So I want to go over this. So firstly, 21% discount to the crypto investor course this month only. If you click the link below, you can get 21% discount. Code is BTC, 21 million Bitcoin, 21% discount. That will expire at the end of this month. 300 videos here to get yourself set up in crypto private Discord groups. You can check all the details down below. So from here, there is no technical analysis to be done. We're still in price discovery mode. There's been some dips along the way, but if we're looking at the week chart here, it's just creeping higher. And even though Michael Saylor, he bought $5 billion and he's announced that, he'll be stepping in with more, but there are obviously other buyers in the market here, and we're obviously just, marching up to 100K. This is 100K here. I'm sure we'll get some resistance here. There's a load of people wanting to sell that and, taking profits at 100K. Obviously, the first time we hit it, I'm sure there will be a dip right here. But look, I think we're still in the buy zone. I'll show you why. Essentially, anything under this trend rate, this orange line, you must buy, right? Anything up here, I think below the previous all-time high, you just keep buying, keep being consistent. Now we've broken out, right? And so decisions have to be made. I still think we're okay. We're still in the early stages of the bull, and the bull market, if it carries on, for me, I think, we can go up to the top of this line, this blue line right here. The reason why I think that is because the US central bank is dropping interest rates because they need to help the Treasury refinance this debt that's rolling over within the next 12 to 18 months, right? So they drop interest rates, which is, the market likes that. Risk assets like that, right? They drop interest rates. The Treasury refinances the debt at the lowest possible blended rate it can. And it's going to create some inflation when you drop interest rates. They're not talking about printing money or any QE or anything like that, but there are ways they can stimulate asset prices. They need asset prices to go up actually, because the budget and tax rates and everything like that actually relies on assets being high and the price level being high. So they actually want inflation. They do want inflation. They just don't want too much, but they're going to create inflation. Inflation is something that is required. They create that and they're in the part right now where they're actually creating inflation. If you think about the lags, right? What we have is we have the central bank policy essentially right now creating inflation. And that's going to come out in the data, the lagging data, in 12 to 18 months. Now, in 12 to 18 months, when that comes out in the data, the central bank's going to have to try and slow things down again, because they just want to create just enough inflation where people don't really notice, but they don't want to create too much because then people get upset, right? And they start looking around and social unrest and stuff. So they don't want that, right? So we're actually in the stage right now where the central bank is creating the inflation and the policy is creating the inflation. Even though we're looking at lagging data showing that inflation is doing pretty good and it's coming down. And that's because the lagging data is actually showing us what happened here. But Bitcoin is not lagging. Bitcoin is forward looking, and Bitcoin is pricing in the inflation that's actually being created right now thanks to policy and what the market thinks is policy, which is a lowering of interest rates so the Treasury can refinance. That's going to continue, in my opinion. Rates on the short end anyway are still fairly high, right? 4% or so. And so I think that could come down to like 2.5%, something like that, right? It all depends. There's going to be some rocky moments along the way, but we come down to 2%. So Bitcoin's going to keep pricing in the inflation that's actually being produced right now as interest rates are coming down and the policy tries to refinance. And so I think we've got a long way to go. Now, how long? Well, March, May, spring is an early end to the cycle. And then you have kind of November, December 2025, which would be kind of the normal end of the cycle. So this white line right here, I think is November 2025. So you'd be looking at anywhere from like $150,000 to $200,000 Bitcoin according to this trend, right? People up here will be telling you that Michael Saylor will be buying gazillions of dollars of Bitcoin all the time and it will never go down. That's not true. It will go down because up here will be when the central bank has to control the inflation again and cause the next bear market, right? This is macro cycles we're talking about. And so the central bank has complete control. Up here, this is the peak end of the bull market. And so what exactly are you doing buying Bitcoin right here? You are potentially buying because you want to buy at 150 and you think it's going to go to 200. It's not a great risk reward trade, to be honest. Buying at 15, 16 is much better risk reward. So up here, if you're buying for a trade, not the best. If you're up here and you're saying to yourself, look, I'm just going to dollar cost average Bitcoin all through the next bear market, and that's fine for me, that's fine. But up here, you're not really going to make too much in the way of returns from the next cycle onwards, right? Because you're just buying the peak. Now, when you blend all of that into buying highs and buying lows, that comes out at the moment around 40, 50% a year anyway, which is pretty good, right? But if you're a bit more sensitive, up here, you really just have to ask yourself a question, what am I actually doing, right? Because there's not much left in the bull market. People say it's going to go to $500,000 a coin. No, they always say that. They always get way too bullish here. They always get way too bearish here, right? So let's just suggest that this trend will continue and bull markets and bear markets will continue. So this top line is going to be some sort of a big resistance zone. And if you want to buy up there, you can do, but you're not getting a good deal for BTC in relation to its longer term trend, right? How long do we actually last up here? You can see the 2017 cycles are just ranging into highs for a very long period of time, almost a year. The last cycle we had that kind of big move, which was kind of six plus months. We had this kind of breakout and then the really, really big 6 to 8 month move here. We had a drop off here and then kind of the next all-time high, which came right at the peak, the end of the bull market. And that's actually when altcoins outperformed. Right here, we've had the first kind of move into the all-time high rejection, but I think we're going into the next one, as you can see. So again, 6 to 8 months, right? I mean, that's what you would usually expect here. So people are thinking ahead, it's going to last longer than it usually does. No, because this is what's happening. And the central bank policy is trying to make financial conditions as easy as possible, bring interest rates down so that the treasury can refinance. So most of the debt is refinanced over 1 to 5 years, a couple of years. So that's where they want interest rates low. But after that, they will have created too much inflation and they'll have to draw it down again, which is the next bear market. So what are we looking at? 6, 8 months, 12 months, something like that, which is the bull market really rip-roaring. Now, that's great news if you have been dollar cost averaging Bitcoin or other altcoins and you got down here. Up here, what that means is that you are not getting good value for your trades, right? The next good value event will be the next bear market. And you should be active there because that's where you're going to make all your money. Up here, this is great. And dollar cost averaging, I think still works here. There's still a long way to go. But we're getting into the stage now where, the returns that you're getting are good if you bought lower. But if you're buying up here, you're either going to take a short-term trade or you're going to be a bag holder and try and get lower prices as the next bear market occurs. And I do think it will occur because it always occurs. If you do trade Bitcoin or crypto though, check out Bybit as well. $30,000 deposit bonus down via the link in the description. Just make a deposit and trade on there via the link below. Some very good news out of the States as well is that we'll probably get some pretty decent crypto policy over the next few years. And as long as we're in the bull market, that's going to mean people are happy to speculate and put more money into altcoins. You're seeing some of them outperform, not really yet, but that's essentially the alt season is actually the very mature end of the bull market, which is probably where Bitcoiners tend to actually start de-risking and start planning for the next bear market. Don't get caught up with all of that stuff because altcoins, during that stage, go from being too expensive to far too expensive. And if you're trading up there, what on earth are you doing, right? So you either make your allocations now, wait for that. You know that they're going to fall a lot in a bear market, right? They're going to fall 80% or so. Don't be a bag holder in any of those. They will do that in the next bear market. Bitcoin's going to go down as well. Leveraged Bitcoin, like MicroStrategy, is also going to underperform probably, right? Because if it's leveraged Bitcoin, as the premium gets crushed a little bit, it can actually underperform BTC. So again, make your plans. We're still in the good stage, right? Still time to buy, still a long way to go. Just make your plans. This shows that risk-taking coming back into altcoins. This is the Ethereum ETFs. They had an absolute nightmare. It was a really bad launch, to be honest. And that's because the Dems literally said, we want to destroy everything and we hate Ethereum. We're suing Uniswap. We're suing Coinbase. We're suing all of you. We literally want you to go away. Well, they lost and crypto essentially won. and pro-crypto candidate here. So we've gone from outflows and we've just switched right into inflows. That's good for Ethereum. It's good for other assets as well. It's good for other altcoins. So I'm sure we reach new all-time highs in altcoin market caps as well. But the alt season is the mature end, the end of the bull market for Bitcoin. And it's the end of the bull market generally. So when you get that huge outperformance, that's great. But don't be allocating up towards that. You don't allocate up here, you actually sell there. So make your allocations, right? And then wait, that's when you actually trade out, right? You're not investing up here because it's going to get drawn down 80%. No one wants that. So look, we're in the good stage, right? So very, very positive. Just make sure you don't get caught up too much in 6 to 12 months time. But yeah, a long way to go still. If you are genuinely a longer term investor, like 8 years plus, then none of this matters. 92 is irrelevant, the price. It's only if Bitcoin gets to like 200K at the peak of this cycle, that's when you can afford to be a little bit more cautious and just say, do I really want to be buying here? Maybe I can park some stables in Aave because the rate's like 25% because everyone's borrowing money to leverage long BTC at the top, which is not the right thing to do. I can park some assets in there. I can afford to wait a little bit. That's what long-term investing gives you, a little bit more time and strength in the market to make those decisions, right? Because you've been dollar cost averaging through the bear market. You're sitting on, a decent portfolio. This is why Bitcoin will continue to outperform, in my opinion. Household pension entitlements are completely unaffordable. Gold is what is promised. Blue is what they can actually pay for. The only way this works is that the government has to create more debt to pay these. And then eventually they need the central bank to help them out by printing money and buying back the debt and monetizing the debt. That's the only way that this works. And that means that the currency will continue to debase and Bitcoin will continue to outperform if you are valuing it in your fiat currency. Debt is now the second largest US government outlay. That means that there's so much debt that the government is going to have to start borrowing money in order to pay back the previous debt. That's unsustainable. The only way you pay this off is by monetizing it and trying to grow GDP at a higher or faster rate than the debt growth, which eventually is stimulative to risk assets. Bitcoin will outperform all of this, so don't worry about it. Just if we're at the peak of a bull market, you can afford to be a little bit more cautious. But right now we're in the go zone. Bitcoin is going to continue to outperform, in my opinion. It's the trade of our generation. 100K is a stepping stone up to much higher, in my opinion, as well. Everything's going really well right now, and we're in the good part of the bull market. 21% discount on the crypto investor course, $30,000 deposit bonus to Bybit as well, down in the description below. I'm James, this is ManZG. Cheers for watching, and I'll see you in the next one.